Welcome to In It to Win It. This is Steve Bordon, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So we are down 2% for the week. Had a little bit of a cratering here from the Fed meeting. I think that people are starting to wake up a little bit that, they're not cutting rates because they think that the economy is going to have a good time. The same kind of thing happened last time they cut rates in the 2007 crisis. Similar reaction. I think we'll see something similar this time. The dollar is up 0.8% for the week. So even though the Fed cut rates, essentially making the dollar weaker, it got stronger. So I think that, and now this is compared to other fiat currencies, but I think that we're going to be heading back down here for the dollar. I think next week it will get weaker. We shall see. The U.S. 10-year Treasury. So this one is interesting. They cut interest rates and the yield on the 10-year went up. So went into quite a bit of detail with Francis Hunt. If you guys didn't see that episode, I'll put a link up here so that you can watch it. Let me make a note here. And he basically made the argument that he thinks that the bond vigilantes are showing up. So David Screek had called this one probably a year ago, and he was like, nobody's talking about it. And it's been in the back of my mind, and I've been worried about it, and it looks like it's happening. So Francis said that he could certainly see this going up to 5%, and that I got out of VGIT for that, the intermediate Treasury. I sold. It was only 1 or 1.5% of the portfolio. It wasn't much, but I was out. U.S. 10-year minus the 2-year yield. So that changed about 35% week over week. The 10-year is now paying 0.21% more than the 2-year, which makes sense because long duration debt should pay more than short duration debt. And the 1-month Treasury is down 0.2% for the week, settled at 4.31. So I don't think we're going to see 4.5 here on the short end for quite a while. And gold is down 1.2% for the week. My bias for next week is going to be up, initially maybe Monday, Tuesday. I think we'll probably hit 2,675, maybe even 2,685, basically just up here where these moving averages are, the 20 and the 50. And gold divided by the S&P 500 just kind of keeps obeying this green line. We changed, what is that, up 0.9% for the week. Gold outperformed the S&P 500. And CEF, physical, air quotes, gold and silver on the stock market, down 1.6% for the week. So it came in for almost a picture-perfect double bottom right there. You guys had your limit orders set there for 23.60. So nice on you. Next one is going to be down at 21.75. PHYS, physical, air quotes, gold on the stock market is down 0.9% for the week. So didn't quite get down here to the 1950 level. Actually, I should probably move this up to like 1960, somewhere in that range. If it gets down to that level, then that will be your first entry point. And then the other, lower bid will be 1875. GDX down 5.2% for the week. So coming in for a nice little double bottom right there. We shall see if this one holds. I think your level is, so your limit orders for 35 hit. Next level is going to be down here around 32.90, 33, somewhere in that range. It looks kind of like we had a bit of a bear flag. I think I drew this out last week. If not, I will do it now. There we go. Yeah, so kind of looks like, well, that went too far, but that's the bear flag right there. And GDXJ, same kind of thing. Looks like another bear flag right here that played out last week and went down. So could still have some more downside on this. Both of these are also paying a dividend. So dividend comes out next week, so that's probably part of that. They're rebalancing the fund to pay for the dividend. It's natural for it to lose value like that or to go down in price. So next one I see on this for GDXJ would be 43. as a limit order. Franco-Nevada down 2.7% this week. Okay, so it's getting kind of cheap again. Anytime we get down this green line, it's getting relatively cheap. So limit orders for 115, that would have hit a couple of days last week. So congratulations. And Wheaton Precious Metals finally got down to that 200 moving average. It's been, 9 months since we've been there and finally got there again. So that would have been your first limit order around $58, $57. So we can delete this line. Now you're in. Next one after that I see with some serious support is 52.50. And Gold Royalty Corporation. So this one, we're getting cute here and put in a limit order for 118 and it hit. So that was cool. The one mistake we made with this was we started getting into this a couple years ago when we found out about it. And I think this one has a lot of potential. I think it's probably going to go up to, $2.50, $3. But this moment right here was when Marin Katusa was basically paid $500,000 to advertise for this, and it shot up. And this should have been where we had basically moved past the point of concern on this stock. The arrows are a little deceiving, but the lower they go, the more, the bigger the position is, the more shares. But this would have been the exit point here. If you can look and just follow this down, I drew circles on each one of these, and each of these is indicating that this is probably a top. Now, it wasn't the price action top. That was way back over here, but you can see the RSI is starting to angle down from here to here. So this would have been our indicator right there, and we just didn't take it. See in the MACD, see the yellow line is crossing over, and then it's moving down below it. Like that's your indicator right there to get out, is basically like that moment right there. You can't quite catch the top, but just right below that. Anyhow, hindsight's 2020. I can see straight looking backwards. Origin Royalties. Now this one's absolutely been killing it. We've had some selling pressure going in here. I think it's basically investors getting bored. I can't imagine there's any tax loss selling going on here. It's probably profit selling. Anyhow, blew through the 200-day moving average. Rising volume, rising 200-day moving average. We're basically waiting on the arbitration from Altius, and then I think this will revalue overnight. So if I was Jim Cramer right now, I would be saying, buy, buy, buy. Empress Royalties. Okay, so this kind of went the same way as Arizona Metals. So I met him out at the New Orleans Investment Conference, talked to him. All right, we'll do an interview over Zoom, left several voicemails, text messages, just never heard back. So anyways, I saw the stock went up, a few weeks after I bought it. I sold I don't know. It seems like a great company to me. I think they got a lot of potential, but I just couldn't get them on the phone. So Barrick Gold is down 7.9% for the week. So just had a little falling out here, just a little falling out. Technicals are getting pretty low. If you don't have any Barrick Gold and you want some, I think now's a pretty interesting time to buy, especially with all the bad news going around. Looks like a pretty good technical entry, just lining up with a bunch of back support if you don't want it there. So basically I need to move this one because this hit for you guys now around $16. And I would put this one in down here around, we'll just call it 15.25, somewhere around in that range. And Newmont is down 4.8% for the week. So this one fell out of bed as well. They're starting to sell off their tier 2 assets. So this one hit up here. We can delete that. And basically your best buy target also hit. If you didn't get in it last week, then, pretty much we'll call it 37.50. Next levels after that are going to be down here at 34 and then way down here down at 30. But 33, 34 I think is pretty good. And Agnico Eagle down 6.6% for the week. $69 would be the 38% retracement. If you take it from the bottom here up to the top, 69 is 38% retracement. If you don't want to wait that long, then you can buy on this rising 200-day moving average because that may not hit. But there is quite a bit of support down here around 77, 75 or so. And if you can time it as the 200 moving average goes up with a low RSI and MACD, that would be an ideal entry point. B2 Gold is down 5.3% for the week. So your first limit order hit here at $2.60. We can get rid of that line. Now your next one is going to be for $2.35. And if we have continued weakness, then it will hit. Equinox Gold is down 6.7% for the week. Now is good, I think. I think limit orders around $5. It's at close the week at 5.16. That's cheaper than any of the 3 bets that I placed on it. I think this company will do very well over the next year, and I'm literally betting on it. But yeah, just right along this upward parallel lines right here. It's hitting it. It's hitting on a lot of back support right there. I like a $5 entry. GE Mining Ventures down 2.2% for the week. So your 720 limit order hit right here. So we can get rid of that. You're in. Congratulations. Also right around the rising 200-day moving average. So that's good. Stink bid in down here for $6. That's probably not going to hit. I think like $6.60 is a little more realistic. Rio 2 down 2.3% for the week. I was really hoping our 38 was going to hit here because it got all the way down to 40. But, you know, just a couple cents away. I almost pulled the trigger right there because it's right on the rising 200-day moving average, increasing volume, low RSI, low MACD. But see, these haven't quite turned back up yet. This MACD looks kind of nasty. I want to see a clear breakout here, but I have so much of the stuff. I've been in it for 3-something years. I don't really need any more, but if it got down to 38, then twist my arm, I'd buy it. Okay, and silver is down 3.5% for the week. So I think we're probably going to have a nice little bounce on Monday. Probably go up on Monday. See, it closed above the 200-day moving average. RSI is starting to angle up, but generally down going into the end of the year. So a lot of people were emailing me when silver was up here around $35, and I said, you know, I think 28 to 30 is kind of your zone. You know, that's when you want to start making some physical purchases. You know, they heard about it and are new to the show because silver's making, you know, new highs, not all-time highs, but new highs. And if you're still here, if you're still with us and you were patient and you waited, now's your time. Okay, you can start dollar cost averaging into here. You know, maybe place 10%, and the way you can play it is PSLV, right, on the stock market. PSLV, maybe this was 10% of your position right here, this $10 one, and then your next position is maybe, I don't know, 40% of it down here at $9.50, and then if it gets real cheap and gets sold off and gets down to like $8.50, that's your final bid, right? That's how you can treat it here on silver. I think it will stay above $26. I wrote $26.50. I was kind of getting down to the gnats. Anyways, down to it, but $26, right? That's your range. $26 to $30. This should be like your first little entry point here. Okay, gold divided by the silver ratio. So we had Francis Hunt on the show, and he talked about this a lot. He talked about silver projection, and yeah, really smart guy. I mean, he called the yen carry trade before it happened. So this had been a carry trade that had been going on for 3 decades, and this guy called it about a week before it happened. So almost kind of a savant, like, you know, smartness to him. He's he talks fast, he thinks fast, and he's right a lot of the time, and just a great technician. So he's one of those breakout traders, you know, not these try to catch the bottoms like I am. Okay, PSLV is down 3.4% for the week. So this first one hit right here, this $10 one, we can get rid of that. Congratulations, you're in. Right around this rising 200-day moving average, increasing volume here. So that's pretty exciting. You know, this trades millions of shares. And this will be your next one right down here, $9.50. SIL. So this is exciting, down 8.2% for the week. So if you have no position yet, I say, like, you know, let's say you're going to bet $100, bet 10 of it now, right? We're right on this rising 200-day moving average, increasing volume. You know, then your next level down here is going to be like $32, and then down here about $30. But yeah, if you don't have anything in this and you want something in silver miners, there you go. SILJ down 6.9% for the week. So your limit order rate here hit of $11.50. Congratulations. Now your next one is going to be down here around $10.25. I would even argue another one like now, right? We got some pretty good back support right back here where we are now, which is, just south of $11. I've been in this thing a long time. I don't really need any more. Maybe I'll get a little bit more. I'm not sure. But yeah, if you don't have any, I think now's a good time. Pan American Silver is down 7.3% for the week. A possible head and shoulders pattern that's going to play out here, but it did hit rising 200-day moving average, increasing volume. So take that for what it's worth. If you have none and you want some, I think now's a good time. And then limit order at $19. And Hecla Mining was off on my timing with this option. I wish I would have taken it out a little bit further. I thought it would have corrected up past this a little further. We got it out for January 17th. I think we're going to need every bit of that. But if we have continued weakness in silver next week, then this option is probably not going to be worth a darn thing. And Endeavor Silver down 5.4% for the week. So broke this first line right here at $4. So you got that limit order in. It's done. And just like the other ones, rising 200-day moving average, increasing volume. Okay. Probably going to go up. Stink bid. So first bid right there hit at $4. Next one here on the 200 moving average. And then your stink bid down here at $3. Copper, paging Dr. Copper is bias for next week is going to be up. It's down 2.3% for the week here. So I think this trend line will, until I'm proven wrong, will be obeyed. I think eventually I'll be proven wrong and it'll drop below this as the recession hits in. But so far, this thing has just held. So that's what we're going by. This is what Lobo had to say about copper this week in his free newsletter. For me, it is a must read every week. The link is down below. He says, being wary of excessive optimism is particularly important for resource speculators. Oh, that's us. Remember that the last time Trump slapped tariffs on China in 2017, Dr. Copper went into reverse and mining stocks got whacked hard. Things did not improve over his term, but the first move was down. Again, I'm not against pro-business agenda. I'm just saying that we should expect extreme volatility ahead, in bold, especially in the first half of 2025. He goes on to say later, copper almost broke below $4 this week. Okay, right there. Almost, not quite. I'm not keen on buying in this space until we see if Trump cuts a deal with Xi or slaps China with new tariffs. But if a great company gets stupid cheap before then, I could be tempted. You guys can read the full report below. I will put the link down in the show notes. And another report that I think is pertinent that everyone should read is right here. Want to buy low and sell high, think copper. I will put a link to this down in the notes as well. So this will give you a game plan of how to play copper as we go into the recession. Now, here's one that I like a lot. Okay, thank you, Blaine, again, for pointing this out to us. This is COP. This is physical copper on the stock market through Sprott, down 4.5% for the week. So I'm continuing to buy as this gets weaker. I don't know how much we can go by the technical chart on this. I am simply going by the massive discount that we have to NAV here on this thing. So a 23% discount. So essentially, instead of having to pay $4.10 per pound of copper, you only got to pay, what is that, $3.40 or something like that? It's just a screaming deal, and I'm taking advantage of it. So next limit order down here. So far right now, this is about 1% of the portfolio. It might be a little bit more, actually, now that I think about it. Maybe it's like 1.5. But yeah, I think this is going to be good. I think this arbitrage will not last much longer. And when it does, I will take advantage of it. Next limit order is for $6.25. Limit orders only. And look, we just went there was days here where there's only 100 shares traded, right? Now we're getting into some volume here, right? Okay, we got 64,000 shares traded. Okay. 6,000, then Friday, 28,000 shares traded. Okay. People are waking up to this and this isn't going to last much longer. COPX down 5% for the week. So first limit order hit at 42. Look at how much washed out we got there, so we can get rid of this. Okay, if you don't have anything in copper, this is what I'm doing. Okay, I'm treating it like Adrian Day, like Joe Mazumdar have said, and Brian London, and I'm buying on weakness. And this is weakness. This is our line right here that it got hit. I've already got some more of this. I should have gotten this on Friday, and I missed it. But there's 3 days there where we could have taken advantage of it, where it got into the low 38s. But I'll be putting in a limit order. Actually, let me make a note of that right now so I don't forget. Limit order circle. And this is our zone right here for another entry. And then after that, we're going to be moving this line back down to around there. What is that? 36.25. Okay. So COPX. I interviewed Michael Oliver of Momentum Structural Analysis, and we talked quite a bit about copper, and we also talked about this physical copper trust. So be keeping an eye out for that interview. That interview will come out tomorrow on Monday. COPJ down 4.6% for the week. So got it here at 1958 and then got it again at 1884. I drew a little circle so we don't forget. Okay, so they paid the dividend. They got to pay for the dividend somehow. And, it got cheaper. So this is junior copper miners. If we're going into a recession, these are probably going to get whacked, but maybe your copper portfolio makes up 4% of your portfolio right now, but you want it to make up 15, right? As this sells off, you can increase and buy more. And Freeport, one of the majors, down 6.6% for the week. So we blew through both of these. So 42 got hit. There you go. Got it. $40 got hit. And now we're going to move this back down. And all I'm doing is just looking back. Where do we have a lot of price action in this? As we go back, and we have quite a bit of price action around 36, I would say. Somewhere around 36, and then again down here around 33. Munduro Capital is down 4.1% for the week. So it seems to just be hanging out around this 12-cent line if you don't have any and you want some. Now remember, super small market cap company. It may even cross into the price point that you have your limit order, and it might not fill because these guys are only worth like 13 million or something. 12.9. Okay, I was way off. Anyways, my next limit order is going to be down here around 9 cents. I think as the recession gets hit, little companies like this are going to get whacked, and I will pick up more. And uranium is down 4.8% for the week. So that went in the opposite direction that I thought it would. Term pricing is in the low 80s, so this is dirt cheap. I think, honestly, there's only a few guys that trade on the spot market here now in the last while, and I think that's a big part of it here. So I placed another bet. Even though the Sprott Physical Uranium Trust is trading at around an 8% discount, and kind of my kindergarten method has always been 12% or more, I think we're kind of in an anomaly here with these carry traders. So this isn't like the real price. There's just very little spot volume that moves around. The real price is like $82 to $85 on the term market. So that's kind of where I'm putting it. So that would make this a massive discount here and one that would fit the formula. So I bought more in the Sprott Physical Uranium Trust, got it at 16.53 the day I did. Look at that though, it could have gone all the way down. I mean, someone got lucky down there and got it less than $16. So that's pretty cool. I hope it was you. Cameco is down 3.4% for the week. Looks like it's coming into like a double bottom right here. We'll see. This may end up forming like a head and shoulder. I'm not sure. I don't really see any buys here. I would wait till at least the 200-day moving average, which is down around 49. URNM down 6.4% for the week. So remember this green line that we've had drawn forever, and we're basically there. RSI 28. Okay, I think this is a nice little buy point. I got back here at the same price and lower. I'm not really looking to get any more, but if I was, this is an amazing entry point, I think. We have a dividend that just got paid, so it usually gets washed out a little bit when the dividends pay. And lining right up with this green line here, I think it's a go. I really do. And URNJ, same kind of thing. So this $20 limit order that you had set is hit. We can remove that. Next one is going to be $17.50. I think now is fine. You have some price action going back here. Low RSI here. Dividend just paid. So washout selling from that. And RSI is 27, rounded up to 28. Good enough for me. And yeah, I think now's a buy, and then another limit order down here at 1750. URNJ divided by Kazatomprom, Cameco, and the Sprott Physical Uranium Trust underperformed by 4.1% this week. So that little white line we drew there didn't mean squat. It got even cheaper. Uranium Royalty Corporation down 8.2% for the week. So now is good. If you believe in uranium, this limit order hit, we can get rid of that. Next one, stink bid down here at $1.90. Getting low RSI here. I mean, 31, 32, pretty low. I just have a lot of this, so I'm being cheap here like I was with Gold Royalty Corporation. Uranium Energy Corporation down 10.2% for the week. Looks like a bit of a double bottom right here. I would wait at least for the 200 moving average, which is at $6.61. Then down here, $6.25 and $5.50. If you have not joined the Rule Classroom yet, you need to take a long, hard look in the mirror and just ask yourself what you're doing with your life. It's my favorite price. It's free. You can literally put the app on your phone. And, this is where we find out about companies like this one, okay? Heard about it from Rick in the Rule Classroom, and boom, look at that. Easy double, past the point of concern. We literally own this stock for free thanks to him. The Rule Classroom is free with loads of content, and this Thursday, December 26th, the day after Christmas, we'll be streaming for hours, taking your questions. It starts at 10 a.m. Pacific time, that's 1 p.m. Eastern. I start hosting at 3 p.m. Eastern time or noon Pacific time. We've got a lot of surprise guests coming in. We're going to be taking your questions. I would love to see you guys there. You can sign up for free in the link down below. I hope to see you guys there. I'm looking forward to it. It's going to be a lot of fun. A lot of fun. Okay, oil, WTI is down 2.6% for the week. Yeah, commodity moved down as expected. I think maybe we get a little bounce on Monday, but I think it moves down and probably touches the $67 mark again. And Brent, same kind of thing, had a little bounce. I think we'll probably get a little bounce on Monday, but not much of one, and then it'll come back down and touch the 72, possibly 71. Gold divided by oil. Gold outperformed by 1.5%, and the ratio is now 38 to 1, so it takes 38 barrels of oil to buy 1 ounce of gold. XLE, this is looking fantastic, sold off 5.7% for the week. So your first limit order here at 87, 86 bucks hit, and we're getting down. We got within 9 cents of the $83 limit order, and it didn't quite hit. So do we say that's close enough for government work? I think we should have known. If we go back to this day right here, see that one got down to 83.02, so it didn't quite hit 83. But look at that RSI. It's down to 24 now. It got down to 18 on Thursday. I mean, just really incredible. So, if you're new to this and you want an oil ETF, this is my favorite, and now is fine to buy. And then the next limit order down will be 79.75. XOM down 4.5% for the week. So the newbies limit order was 109. That hit. Congratulations. You are in. And next level down is going to be right around now. We'll call it now where it is now is great. And then below that is going to be around 102. So why did I hold off when the 109 level hit? Why didn't I just execute right there? And How did I know it was going to go lower? Well, I knew because of this software. Thank you, TradingView. But you see this bar right here. See how this bar just blows through the 109 level? Just heavy selling right there and then continues going down. No guarantee that this is the bottom, but I feel much more comfortable that this is the bottom than 109 for sure on the day, and I was watching it. So you guys can check out this software for free. You know, you don't get all the indicators that we got here when you get the free version, but once you get the paid version, you do. And try it out free with the link below. Thank you for using that link. You're supporting my family and my work. And yeah, I love this software. I wouldn't know when to buy if it wasn't for it. But I mean, look at this, RSI 17, 18, 20, increasing volume. I think we got it. Chevron is down 7.2% for the week. So same kind of thing. First limit order up here, the 148 we've been talking about forever, finally hit. Good on you. Next one is going to be 135. This is going to be a stink bid, and that's just lining up with two spots that it hit in the last 2.5 years is right there. So hopefully it gets down to 135. I think it will. It may not get down to it right now. I think it's probably more likely that we get a bounce right here than to continue down. But, you know, if you want a stink bid, now's the time. And Occidental is down 1.1% for the week. So we moved our support line down to 43. Had a little bounce here. Warren Buffett's buying more of this, so I think some of that of the stopping the bleeding here on this may be from him. Blackstone Minerals down 3.7% for the week. So amazing dividend on this thing. So your yellow line here of 14.75 hit. We can let go of that. And the green line, it is in it right now. If you don't have anything in this thing pays north of a 10% dividend. I mean, it's just absolutely incredible. So last time we were down here at the $14 range was September of last year, and then September of this year, August of this year, and then the time before that was March of 2023, and then the time before that was 2.5 years ago. So doesn't get down here often. When it does, you know, they pay 37.5 cents per share, and it's only $14 a share, and they pay that every 3 months. This is a great dividend play. You know, if you're retired and you just want to collect, I think it's this one and Freehold royalties. Freehold is down 4.7% for the week. Also fantastic dividend. So the dividend's only getting greater. And then this one, same kind of thing. Last time it was down at this level was 2.5 years ago. And natural gas up 14.3%. So last week, I thought that this would go down, and I pulled it out to the 30-minute here, and I was right for about 45 minutes, and then after that, for the rest of the week, it just shot up. So didn't see that one coming. We had Doomberg on last week. That was our most downloaded episode ever, and he had a lot to say about oil and natural gas. So pretty interesting. He's in the camp that oil and gas is plentiful and this stuff is probably getting cheaper. Then yesterday I just recorded, it was 2 hours and 40 minutes or 2.5 hours, something like that. I'm going to break it into a 3-part series with Christine Guerrero, who gave a very compelling case that was basically the opposite of what Doomberg said. So that'll be out next week. So we got Michael Oliver on Monday, and then we'll have that 3-part series. It'll go out Tuesday, Wednesday, Thursday. So you'll have some content for the holidays. Oh, I haven't said Merry Christmas yet, so be sure to have a Merry Christmas with your family. All right, and Devon is down 9.2% for the week. This is probably the most emails I've ever gotten. Probably because I cover this every week, and you can just see my failure every week as this gets cheaper. Wedge pattern worked out to the downside, buying back shares. Yeah, maybe I'm compounding the error, but I like this company a lot. I think they're going to do very well. We'll see. We shall see. But I bought more. I got more at, what is that, 31? Oh, shoot. I moved it. Oh, you know what? Watch this. Watch this. Ninja edit. Bam, right back there. If you ever undo, just hit the little undo there. That'll save you. A little trading view trick. But look at the RSI here. RSI is 19. I mean, that's pretty low. Could it go lower? Yeah, it could. But I mean, at some point, I think it's got to go up. Woodside is down 2.8% for the week. I might be running like a tax loss on this. We'll see. So your limit order here around 15 hit. We can get rid of that. Stink bid is going to be about $14, just lining up with some back support back there. And Birchcliff is down 2.3% for the week. So it got more at $3.40. And the low right here, at least the recent low, I put right on this green line, and that is $3.15. So maybe it'll come up for a double bottom there. And the other Canadian natural gas play is Peyto, and we were patient with this $10.65 limit order. Now, what I thought was a little odd on this was I had it set for $10.65, which is what the limit order was. It filled at $10.64.5. But when you look here on the chart, it says that it only got down to $10.66. Whatever, I'll take it. But finally filled. So next limit order is going to be down here at $9.75. And coal, thermal coal is down 2.6% for the week. I think we got a pretty good, soft floor right here at like 127 to 125. And met coal down 1.1% for the week, just trading sideways. Bias for thermal coal is up next week, and met coal for this one will be sideways next week because that's what it's been doing for the last like 2 months. Coal ETF down 7.5% for the week. So awesome. We lost about 800,000 in assets under management. So now it's 25K short of 10 million assets under management. Had your limit order hit here for 22, what did I have it at? 22, 25, something like that. Get rid of that. Next stink bid is going to be down here at $20. I think they're probably going to have a dividend here. So maybe this is some of the dividend rebalancing. So, it's not often that it gets down here. If you didn't have that 22 bet, I think now is fine. I've already got quite a bit of this, but if it got down to 20, I would not be able to resist. Glencore down 5.5% this week. So we had a limit order hit here Friday of last week at $9.40. I like that level a lot, and then it just dropped down below that. So so much for that level holding. I think now is fine. And then the support that I see is going to be around $8. Looks like a pretty decent support going forward. Anywhere from like 8 to 8.50 has quite a bit of price action around it. So if you want to get into Glencore, they're in all the right things. They are in some of the riskier jurisdictions, so keep that in mind. But they should benefit enormously from a commodities bull run. AMR getting sold off here, possibly coming in for a double bottom right there. Was kind of hoping this trend line would get held. I may play the tax loss selling game on this one. We'll see. Only got a few more days in trading action here before the new year, and we can't do that. But time will tell. I think maybe if this limit order hits, I'll probably just stick it out. And if it doesn't, then I may try to hold off for 30 days or so. Might be timing this one terribly. We'll see. And BTU down 6.2% for the week. So I bought the option on this one, and then it just dumped like 40 cents right after I bought it there. I was like, no. But I was just lining up with this back support right back there, kind of a double bottom here on the 30-minute chart. Thought I caught it, went down. Looks like it's actually going to go lower next week. But I did take an option that was a little bit further out, so this doesn't expire for 2 months. So I got over 60 days on this one. But look at the RSI down there at 25, just getting waterfall sell-off. I'm just going to try to rinse and repeat this pattern that's just been working. I mean, I've run it 1, 2, 3, 4, 5, 6. 6 out of 6 times it's worked. Hopefully this is 7 for 7. We'll see. We shall see. All right. Platinum up 1.3% for the week. Bias for this one is sideways next week. So your limit order in there of 936 has hit. We can remove that. Stink bid is going to be down here at 900. PPLT is up 0.7% for the week. So your limit order's just hit all day long last week. So you got in there, good on you, at 85. Now your stink bid will be in for 80. And Palladium is down 4.4% for the week. So bias on this one is going to be up. It is below the 200-day moving average. So don't really like that, but a lot of support right here around $900. So, if you don't have any Palladium and you want some, this is the way to do it. PALL. That one also hit last week, finally got in for a nice little double bottom right there, although unfortunately broke below it, but your first order of 85 hit, so we can get rid of that. And then now your stink bid is going to be down here at $80 as well. So real easy to remember, PPLT and PALL, both limit orders, $80. And SPPP, so I've been waiting on this one for a long time. I know you guys have been waiting on this, and it finally hit. So your $9 limit order is in. Congratulations. Nice little setup there. It's down 2.3% for the week, but it finally hit. So good on you for being patient. And the next one is going to be way down here. I probably should draw one right here at like $8.75, and then the stink bid at $8.25. You know what? So yeah, I'll move this up here like that. And then to put a line in right here, we just hover over where we want and we hit alternate H and the line goes in. And then if you want to adjust it, you can do different colors here. Maybe we'll do this one green, and then we can do this one like light green or whatever tickles your fancy. Now, this one is platinum divided by silver. So this little blue dot right, or blue arrow right here is basically when I did the trade with Andy Schechtman. And so the ratio that I got was about 31 to 1, 31 ounces of silver for 1 ounce of platinum. And this is what I'm hoping to do. So this I have kind of always done, and but I didn't really realize what it was I was doing until Steve Penny over at Silver Chartist put it into words, and he calls them if-then statements. So like this is if platinum gets to parity with gold, I should put then I will trade 50% of my platinum for gold, right? An if-then statement. And then this one, if platinum gets to 1.5 with gold, I will trade 30% of my platinum for gold. So now 80% is gone, right? If this ratio goes back up, this is what I'm going to do, right? Then the final bet, if platinum gets to 2x with gold, I will trade the final 20% of my platinum for gold and be out of the trade. So if it goes up here like it has beyond, the 2.4 to 1, essentially 2.4 ounces of gold for 1 ounce of platinum, that seems insane right now, but the ratio is 0.35. So right now, one platinum coin will get you a third of a gold coin, but there's times in history where one platinum coin will get you 2 or 2.5 gold coins, right? So these are the if-then statements, and this is what I'm going to do if this ratio reverses. If not, then I got a bunch of platinum coins for nothing. And nickel is down 2.8% for the week. Let me zoom in here on the daily. There we go. Okay, so this little floor right here that I thought we had looks like it's breaking down below that. I think nickel is going to get hit here in the recession. NIKL just paid the dividend, sold off a little more. This is an annual dividend here. Like you can see, if we adjust this for dividends, the chart doesn't look quite as bad, but these nickel miners apparently pay quite a bit. And yeah, this is basically when do those Indonesian nickel miners, when are they not allowed to mine over there anymore? And then this should re-rate overnight. Centaurus Metals getting pretty cheap, so your limit order in here for 27 cents hit. And then the next one is going to be down here at 21 cents per share. Maybe we got some tax loss selling going on here. And you might be able to get it. I think it'll hit. And iron ore is down 1.4% for the week. Bias for next week is going to be down. BHP just got smacked. So around that $50, $51 level, got even cheaper. But if we back up here, we can see that there's been a few times in history. So back October 21, November 2021, and then back here it hit several times around $47.50. I think now is fine. They pay a pretty good dividend. You know, again, this one too, we can adjust for dividends and we can see. So like this arrow right here, the price I got it at was $50.84. But if we follow down here to where the where it is, it was like paying $37 because of all the dividends that I've gotten from this thing over the last 4 years. Rio Tinto fell below our $60 per share here. I might actually run a little option on this. We'll see. But next kind of semi-serious support I see is around $58, $57. $58, $57, somewhere in that range. And the PIC ETF is down 7.1% for the week. So went through our 36 level right there. Dropped down below that. A lot of this has to do with the dividend here. But I think we'll probably have some more weakness here. Looks like the chart is breaking down. And maybe we'll get lucky and it'll hit 33. Nutrien fertilizer down 7.5% for the week. So your $45 limit order hit. So we need to move that line down. Next pretty major support, when I went into the weeds back here, it looked like around $40.25. And Bitcoin, this one's kind of interesting. Okay, so we had the target of 108 got hit, and then we dropped back down here to 97. So the way we can run this here is we will bring the Fibonacci extension from there to there. And then that's how we got, let me get this up here. That's how we got the 107, 108 level, right? And then if we want to do it again, now I think what's going to happen is now that we hit this, we're probably going to get retraced and we're going to come back down to this line right here. How long does it take to get down there? I don't know. But I think this trend line will get hit again. This is what Gareth Soloway calls returning to the scene of the crime. Right. So if that happens, we can run another one here and we basically go from the bottom to the top and then back down, and you know, it could hit here, it could hit here, but whatever, close enough for government work, we'll just put it right there. And then if we see, what does that run up to? It runs up to 136. Okay. Now there's another one we could do. You guys know, and you see here the cup and handle, right? You see this giant cup, and then you see the handle and then the breakout to the upside, right? Well, if we trace the bottom of the cup to the top of the right, we got a move of 57,000. So if we run that same math and we run it up from the top of the cup, so I'm just lining up right over there, top of the cup, and then line it up 57,000, we'll put it right there, 130K, this one's saying 136K. Close enough for government work. It's probably going to hit after it retraces down here. It's probably going to hit up in that range up there. So if it does, you know, I've got a little bit of Bitcoin on a ledger that I plan on never selling. And honestly, I think it will probably go the way of the dodo and eventually be worth nothing. But if I'm wrong, I've got some. But this one, if this plays out the way I think it will, I will trade it. And I'll do it somehow through the stock market, maybe on one of the ETFs or something. Alrighty, well, I hope you guys got something out of that. Would love to see you guys out at Boxing Day. I'm really looking forward to that. December 26th at the Rule Classroom. There's a link down in the pinned comment and the show notes below. And be sure to check out Lobo's Copper Report. Love you guys. Thanks for always being here. And be sure to support the show. And share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.